This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, September 29th, 2015. Euro dollar. So although the euro remains well supported ahead of some key support right now at 110.87, overall the market remains pressure to the downside, with deeper setbacks favored eventually below 110.87 and back towards that key July low at 108.09 further down. At this point, only a rally back above the recent highs that we saw around the 114.60 area would compromise the current downtrend. Sterling dollar. So cable remains pressure to the downside, with the market taking out some key support in the 151 area and putting the pressure back on a retest of that low that we saw going back to the 4th of May at 150.90. A break below 150.90, of course, would then expose psychological barriers at 150 further down. At this point, the downside remains well intact, and ultimately a break back above that high that we saw several days back at 156.59 would be required to take the pressure off the downside. Dollar yen. So dollar yen remains pressure to the downside, with the market consolidating over the past several sessions, but looking quite top heavy and favoring a lower top at 121.74 ahead of the next major downside extension back towards those recent extreme lows on August 24th at 116.12. At this point, only back above 121.74 would compromise the bearish outlook. Euro Swiss. So Euro Swiss continues to consolidate, but the recovery outlook remains well intact, with the market focused on an eventual test of the next measured move upside extension towards 112. At this point, any dip should be very well supported, with only a break back below 107.14 to compromise the constructive outlook. Aussie dollar. So Aussie remains locked within a well-defined downtrend, with the market consolidating just off recent multi-year lows, and deeper setbacks are favored below that low that we saw just over 69 and towards next key objective at 68.30 further down. At this point, only back above 72.80 would really give reason for a potential shift in the outlook, while ultimately a break above 74.40 would be required to force a shift in the structure. Dollar CAD. So dollar CAD remains well intact. The uptrend remains well intact here, with the market at multi-year highs, at 11-year highs, focused on fresh upside towards next key psychological barriers at 135 further up. At this point, any setback should be very well supported, while ultimately only a break all the way back down below 128.60 would compromise the constructive outlook. Kiwi dollar. So Kiwi remains confined to a well-defined downtrend, with the market consolidating and looking to put in a lower top ahead of the next drop back below the recent extreme low that we saw back on the 24th of August, which was a multi-year low, and towards the 60 area further down. At this point, only back above 67.40 would be required to force a shift in the structure. SPX 500. So the S&P 500 remains well capped on rallies, with the market undergoing a major structural shift at the moment. At this point, a lower top is now sought out in the 2022 area, which will be confirmed on a break back below that extreme low on the August 24th around 1830. Really, at this point, only back above 2022 would compromise the bearish outlook for the S&P 500.